Securities offered through Kestra Investment Services, LLC, Kestra IS, member FINRA SIPC. Investment advisory services offered through Kestra Advisory Services, LLC, Kestra AS, an affiliate of Kestra IS. Capital Advisory Group, Inc. is not affiliated with Kestra IS or Kestra AS. Neither Kestra IS nor Kestra AS provide legal or tax advice and are not certified public accounting firms.
You work hard for your money. For the next hour, you're going to learn how to keep what's yours. Capital Advisory Group presents Keep What's Yours. Here is Josh Gilbert and Jeff Zufall.
Hello and welcome to Keep What's Yours with Jeff Zufall. I'm Josh Gilbert, sitting here with Jeff Zufall. He is the Senior Tax Strategist and Wealth Advisor with Capital Advisory Group. Hello, Jeff.
Hi, happy Saturday. Good to be here.
Talking taxes on a Saturday.
Yes. It's great.
Oh, and it's beautiful outside.
Yes.
We're in the fall officially. It's October, and October is financial planning month, so we'll get to that in just a second. But as always, I like to start off the show by just telling people Jeff Zufall is the guy that you need to contact if you need help with your taxes. And taxes aren't just April 15th.
All year long, yes.
Taxes are all year long. Do you realize that every time you get a paycheck, and this was not a payday Friday.
Next week.
Just fingers crossed, can we make it till next week? Every time you get a paycheck, there's a taxable event.
Yes.
That has happened. So
with a lot of stuff going on behind the scenes.
So look at your stub, pull that out. When's the last time you pulled that out and looked at it? You always look at the bottom line, what went in, but what came out?
What came out, where'd it go?
And where did it go?
Does it help you or hurt you is the question.
And I coined this phrase, and we're still waiting for the
copyright.
The copyright to go through. Paycheck gymnastics.
Yes.
How can I bend my paycheck in different ways without breaking it? In ways that I can keep a little bit more of my money in my bank account rather than going out to the federal government. And we are looking at personally what we pay for my son's schooling.
Yes.
We are getting that in an account, an FSA, saving that, keeping it away from the tax man.
Yes.
And then just using that money to pay for school. I'm in the 24% tax bracket. Well, that means, I'm saving that much.
Exactly.
On money that would be spent on school anyway.
Anyway, you got to write the check. So do it on a tax-efficient basis.
And the government, Congress, whoever wrote the tax code, IRS didn't write the tax code.
No, they just enforce it.
They're just the enforcement wing.
Congress that actually writes the tax laws, puts them in play, with a lot of lobbyist groups involved to say, hey, we need this or we don't want that.
Yeah. I remember the postcard. We were supposed to, we file.
It's supposed to be.
Fill our taxes out on a postcard and mail it in, and that's it.
Never happened.
That will never happen because the lobbyists at the big firms, the H&R Blocks, and
made it more confusing than what it was back when the postcard was put out there.
If you made it easier on everybody, we would cease to exist.
Exactly.
And frankly, it's a necessary evil at this point. We can go to Congress, we can email our senators and just say, hey, we want to make the tax code easier. But until that happens,
it's not going to be any easier.
It's not going to be any easier, and that's why Jeff is here to say, look, and Jeff has said, hey, if they wanted to make it easier, I'd find something else to do.
Exactly.
Jeff's going to
flat tax, boom, you're done.
Flat tax, boom, you're done. Maybe you don't need me as much as you might. Jeff's going to go be a farmer.
That's right.
When
It'd be
that
cool.
happens.
Drive some John Deeres around.
But that's not going to happen.
And anytime soon from what we see, that's really not going to happen.
It's not the way it is. So you have to work with the system that we're given. And it's a very complex system. The tax code is 70,000 pages, 7 Bibles worth.
Yes, that's a lot of reading.
Written on that real flimsy paper. And the question is, how can I work within the system to keep a little bit more of my money to use the tax code? They have written into the tax code, baked it in, that there are huge benefits for corporations, but they've also thrown us a bone, too.
There's a bunch that they've tossed out there for us, just on individuals. Yes.
Like you and me, and you're a small business.
Exactly.
So there's small business things that you can do. Jeff is a small business specialist, actually. So if you opened up that flower shop or you finally took COVID and said, look, I'm going to quit the job and finally open up my own consulting business or something. Now you're a business owner.
Exactly.
Now you have different tax liabilities.
Completely different tax liabilities.
Completely different. I never knew until I started talking to Jeff that the money that comes out of my paycheck to go into my Social Security, to go into my Medicaid or Medicare or whatever, that is matched by my employer.
Yes, dollar for dollar.
I had no idea that Mr. Dorsey was matching that dollar for dollar. That's the law.
He's a nice guy, isn't he?
Yeah. What is that called? Employment tax.
Yes.
And business owners have to pay it.
Have to pay it.
If you work for yourself and you're self-employed, you have to pay your taxes and the employment.
Exactly.
The employment tax, the match.
So you're the employer/employee.
So you got to pay both now.
Yeah.
I never knew that that's how it worked.
Yeah.
So when you're a small business, things like that pop up,
and
you have to make sure that even given that double taxes, and it's going to me ultimately.
Exactly. It's still going to your account. It's going to your Medicare. It's going to your Social Security account.
I just have to pay it now instead of
it's a whole nother debate.
Right. So knowing that, you say, well, how can I be profitable knowing that even, my tax liability has increased?
Yes.
And Jeff can even kind of do a full audit of your business.
It's an audit. Basically, we're looking at profit loss statements, balance sheets. Sometimes we see stuff that is omitted, and not intentionally, but it's, I didn't know I was supposed to put that there, and we'll help you stay compliant from that angle.
Yeah. So do you pay taxes? The answer is yes.
Yes.
Everyone does. And if you don't, call me.
Yeah.
I'd love to hear what's going on in your world and how you were able to do that. So Jeff Zufall is here. If you pay taxes, you pay taxes not just on April 15th, but every
time you get paid.
You get a paycheck, some money is coming out and going somewhere.
Yes.
How do we keep more of that in our paychecks, in our bank accounts, with the full authorization of the U.S. federal government? We can
full faith and credit of the U.S. government.
We can do things that are probably illegal, but how do we keep a little bit more money in the legal way?
Yes.
Jeff can take a look and figure that out for you. He's already helping us keep some money. So just say, what's that FSA that Josh is doing? Or, hey, I've got a lot of medical bills that I know I pay every year. How can I pay that with tax-free money?
Efficient, yes.
Tax-efficient money.
Yes.
Give Jeff a call, 636-394-5524. CapitalAdvisoryGRP.com is the website. Now that we've gotten that out of the way, let's get into the meat of the show today. The Inflation Reduction Act was passed.
Yes.
And was this the Build Back Better light?
Yes, exactly. So it's referenced, if you see this written anywhere, you're going to see it as IRA. And most people automatically assume.
But this is a tax show, and IRA
individual retirement account.
Yeah.
It's not. It's the Inflation Reduction Act.
They could have named it something
Yeah, because the name, honestly, there is no reduction in inflation. This thing is not going to do anything. Yeah. It's a push, basically. But there's some.
How many acronyms exist in Washington, D.C.?
There's too many.
IRS, IRA.
Too many. Everything's
two
3
IRAs.
digit.
Yeah.
Yeah. So
FCC.
Everything's 3 digit. So, but in the Inflation Reduction Act, they're now starting to come along and actually do a little cleanup work, if you want to call it.
Okay.
So there's 6 little changes.
So passed Congress, the House and the Senate. It's passed.
Oh, it's a bill. It's a real live law. It's out there.
It's going. This one has the tax credits for the electric automobiles.
Yes. But now they're refining what's taken place, because part of that was like the EV or electric vehicles. There was a debate over who could actually be in it, car-wise, car manufacturer-wise, models. They're starting to actually get down to where it's normal, if you want to call it that.
They're just refining it.
Yes.
Now and I love how they voted on something and they say, "Oh, great! Now it's passed. Now let's
fix it.
Now let's actually make it a real something."
So everybody was panicking on the corporate minimum tax. And the trick to the corporate minimum tax is this: it's for C corporations that are basically taxed at a flat 21%. Regardless of their size. But if you're Home Depot, and we've talked about this before, you have a whole floor or team of accountants and attorneys that figure out how you don't pay any tax, or GE didn't pay taxes for years. So now they've come along with this 15% minimum tax on C corporations The trick is
no matter how many deductions you can find, no matter how many tricks,
hypothetically,
you can hoops you can jump through,
yes.
loopholes that you've created for yourself, using lobbyists that
yes.
have steak dinners with the Congress people. No matter how many of those you've created, you still have to pay a bare minimum of 15%.
15% is what they're saying. So this is for corporations that basically have $1 billion or more for 3 consecutive years. And basically this tax only applies to the excess of that $1 billion now. It's not a flat tax straight across the board, 15% on.
Here we go. Here we go.
That's where everybody read it, and we're like, oh, okay, you got $1 billion worth of revenue. You're going to pay 15% on that. Nope. It's now the first $1 billion, and it's basically rolling back for 3 consecutive years. And saying basically first dollar over $1 billion is where it goes. So there's your first little adjustment.
So walk this back for me. What kind of corporations is this hitting?
It's only going to hit C corporations, true corporations.
Over $1 billion.
Over $1 billion in revenue.
Who is that?
Home Depot, GE, Coca-Cola.
The big guys.
$200 and something billion in revenue. So it's the big guys basically. But there's already little loopholes now kicking in. So it's not on the full dollar. It's only in the first dollar over $1 billion.
Over $1 billion. So you can make $1 billion, be tax free.
Yeah.
But if you make $2 billion, you got
paying 15% on $1 billion. Yeah,
on $1 billion.
On $1 billion
yeah,
above. Yeah.
Gotcha. The math.
So that's the first little. It really isn't going to hurt anybody, but there's your first little tax law that they've already kind of started to hack away at.
The big guys have already said gotten $1 billion.
Gets to slide. Yeah.
Gets to slide away.
Yeah.
Okay.
So there's one. Corporate. This is one that really does corporate stock buybacks. Where they're saying that, this was the one a couple of politicians really went after, saying, oh, that's not fair. It's only for the rich. It's a 1% excise tax if they buy back their own stock from shareholders.
Is that going away too now?
No, it's not going away. It doesn't take effect till 2023. And there's some tricks.
They're going to do it now.
Yeah, there's some tricks. They can hurry up and do it now, bypass it.
We've got 3 months left, boys.
And now if it's a non-selling shareholder, it's not going to be a actual 1% excise tax. It's going to end up falling into capital gain territory.
Here we
Gets
go.
a little complex, but there's another change there.
Mm-hmm.
So electric vehicle credits are the same.
Okay.
But it's a credit up to $7,500. To buy a new EV, and that's now extended to 2032, which is kind of cool. And then the manufacturer's threshold used to be 250,000 vehicles. They actually lowered it to 200,000 vehicles. Then at 200,000 plus, it causes the vehicles, that model in a sense, to be phased out of that credit.
So if they had, let's just take one example of the new electric Ford Mustang.
Yes.
Okay.
If they in 2022, if they sell more than 200,000 units, it doesn't get the credit. But what they're doing is now they've repealed it after 2022. So starting in 2023, it doesn't matter now. So if they sold 500,000 in 23,
they all
you'll
get
the
credits. Okay.
Yes.
Because what they were saying was this car is so popular right now, it doesn't need our help.
It doesn't need the help.
But they're trying to push people into EVs.
Yes.
But when, the cars are flying off the shelves, they're like, well, we don't need to push people. We don't need to give people a bonus. They're going to buy them anyway.
So if you ever went to the IRS's website, I think you did that, looked at the vehicles that were listed, they gave you the manufacturer and the models.
Wasn't there because
they sold too many.
So many Priuses.
But if you bought your vehicle, your Prius in 2022, you don't get the credit. But if you buy it in 2023, from what they're saying and beyond,
they're getting rid of that.
You get the credit.
Well, I like that.
Yeah, so it's kind of cool. So that's a good adjustment.
It opens it up a little bit more.
Yeah.
So all the vehicles are now. Do they still have that exception where it has to be built in the U.S. or the battery has to be sourced?
Got some income thresholds on it. And some cost. So I think it's $80,000 for an SUV or a van or a pickup truck. $80,000's the cap. You can't go higher than $80,000.
If you have the money to buy something that's more than 80, like that new Hummer
Yeah.
EV. If you have the money to buy that, you don't
need a credit.
You don't need a credit.
Yeah.
You've got
Exactly.
you're probably living on Easy Street.
Yeah, and it's $55,000 for just your regular passenger vehicles. So they've redefined that.
Mm-hmm.
From an income threshold, it's $150,000 single, $300,000 joint.
Mm-hmm.
So I mean, most people should make that cut and be able to do it. Used credit. So if you buy a used EV, it can't cost any more than $25,000 for a used vehicle, and you get a $4,000 credit. So before they said, "Hey, we'll give you a credit of $4,000," but they never had a cap on price. Now they have a cap on price. So $25,000 or less, and you get a $4,000 credit for a used EV.
So this thing, should we just kind of say, there's only 3 months left in this year.
Yeah, 23 looks a lot better than 22.
If you're looking at buying an electric vehicle, give Jeff a call, 636-394-5524, because you can take advantage of the
tax credit,
Inflation Reduction Act tax credit that's built in for that $7,500. That could,
that's nothing to sneeze at.
No,
yeah.
I mean, really,
it's a big difference.
Go a long way into deciding what vehicle. Should I buy an electric vehicle or should I get the gas version?
Exactly. Yeah.
That could go a long way.
Definitely. So, and there's some weird, how do I want to say it? Some of the, whether it has to be manufactured in the U.S., they realized when they put those rules out originally that none of the cars qualified.
Yeah, oops.
It's like, oops. So that's
it's a global economy
now.
It's
still getting reworked. There will be some. The good news on that is it did spark some new battery manufacturers that are going to be based out of the U.S. that manufacture in the U.S. I think Ohio, California, maybe Phoenix, something like that.
Made in the USA.
So that's the good news on that. So the other thing on it is your home energy credits. So it's a 30% residential clean energy credit. So basically it's a 30% credit that was going to expire in 2023, has now been extended to 2032. So either somebody's dyslexic and they just flipped their numbers, or they intentionally did this. But basically it's also for a battery storage technology. So before it was solar panels, wind. If you could figure out how to put a windmill on your house and your HOA would let you do it, more power to you. Solar panels, all that fun stuff. But you got a 30% credit as you went forward. And it's a non-business energy property credit, but it's up to $1,200 max.
Okay.
So 30% or $1,200, whatever is greater. It'll also give you, for windows, exterior windows, skylights, all that fun stuff.
And that might, if you were thinking about putting solar panels in,
exactly.
If you were thinking about doing something like that, getting new windows or whatever, there inside of this Inflation Reduction Act are a lot of tax things that we can take advantage of.
Yes, a bunch.
Don't do anything yet until you call Jeff, because it could really influence when you want to do these things, how you want to do them, or if you do them in the first place. Yeah. Like, if I tell my wife, hey, solar panels would be great. Yeah. And then if I come home to her and say, well, we can get a $1,200 credit, and we
cost you $25,000 and put them on, but you get $1,200.
We might have a guy up on the roof tomorrow. We don't know.
Exactly.
I had a neighbor that did that. And, his reasoning wasn't because he was a big tree hugger or something. He just hated Ameren for whatever reason. Yeah. Or he hated the electrical company. I don't remember if we were on whatever grid, but it could really sway you. And the worst part is you were going to do this and didn't take the credit that's out there. So that's what we like to say on this show. There are things out there in the tax code for us, but nobody told us about it.
Yeah. See, we had a big regret years ago, maybe 10 years ago. They had golf carts. And if the golf cart was street legal, where it had a horn and it had mirrors and blinkers and all that fun stuff, you could actually deduct your golf cart. And it was a one-time shot in the tax code.
Yeah.
And we're like, that's impossible. Nobody's going to let that through. And sure enough, it was real. But we didn't take it.
But you didn't take it.
I wish I would have.
Because you didn't know about it.
It sounded way too good to be true, but
that'll never happen.
But
and then it did.
Apparently, a senator or congressperson needed a new golf cart, and they're like, "Hey, let's make these deductible."
Oh, gotta love the pork.
Yeah,
sometimes the pork.
But that was
down to us.
the precursor to these EVs, because most of the golf cart had to be an electric golf cart. So it was pretty funny.
So the idea is Congress passes these things. They put certain things in there. Believe it or not, they say, hey, let's give the little guy a little something.
There's a little trickle down.
Just to make sure that maybe we get reelected at some point. We'll give a big tax break to GE, but we'll also give the little guy something.
Yes.
But they don't send their aides out to our houses to tell us, hey, this is what we did.
This is what you can do. Exactly.
Here's the thing. Maybe I will vote for your reelection. If you just told me.
Yeah, tell me what's in it.
Tell me what's in this bill that I could personally take advantage of, and then I can say, I give credit to XYZ politician.
Yes.
Here's my vote come November.
Yep.
But they don't do that.
They don't do it.
No. So it takes.
Because the aides write all the bills, that's why.
Yeah, they don't even know what's in there. They passed Affordable Care Act before we ever got to read it.
Yeah.
That was the famous one. So that's what this show is for. Jeff Zufall, Capital Advisory Group. Keep what's yours. It's the name of the book, and you can go to the website, capitaladvisorygrp.com. You can get a free copy of the book to your house, sit down, take a look at it, dog-ear a couple pages, call Jeff, 636-394-5524, and say, I heard you talking on the show. We might want to do solar panels. We definitely wanted to buy an electric vehicle. How can we do this in the most tax-efficient way possible? Because I'm not going to read the tax code.
Exactly.
You do it for me.
Exactly.
And the money that you let us keep, the money that we save, is worth driving out to the office and having a consultation.
Little sit down, exactly. So the last one in here is excess business losses. So this one was kind of hidden in there, but basically if you're a sole prop, an individual trust, you have an estate or what's called an S corporation, partnerships, LLCs, anything that's a pass-through, you were capped basically for 2022, your losses. So it just went terribly wrong for you, and you lost a ton of money. You were capped at $270,000 for single, and they reference this as unmarried, and $540,000 for married joint filers. Basically, it's basically what they've done is they've extended this now to 2028. So in the past it was going to expire, but now the caps are, you can do whatever you want to do basically, and it's going to run out there for a while. So it'll be extended to 2028. So if you're a business owner and you just literally got ran over by a truck for whatever reason, it's now to your advantage. So that's the one that was hidden out there. So.
Well, there's a couple of things. We read the bill. These things are like 40,000 pages long. Yeah. We read parts of the bill, and now that it's becoming more of a reality, now that 2023 is looming out there,
coming around the corner,
are actually going to start getting in play. They're starting to make some tweaks, and if you're somebody like me and says, tax the corporations, a little disappointed that they get $1 billion. Kind of off the top.
Right off the top.
But, they also threw in there for electric vehicles, sky's the limit.
Exactly.
Go out and buy an EV and take your tax credit. So there's some good things. There's some, tweaks. There's some bad things.
There'll be more.
On,
there's more coming.
How you feel. But the more that this becomes a reality, then we can start using it.
Exactly. Use it to your advantage.
So they're tweaking it before they, push it out on the street and say, have at it.
Yes.
The only way to access these things is to know what's in the tax code.
Exactly.
Know what's in the Inflation Reduction Act, which means calling your congressperson and getting the aide on the phone and having them
saying,
read
hey,
it to
why'd
you
write that in there?
Yeah. Or you can get Jeff Zufall, which is a lot easier to get on the phone, 636-394-5524. If you pay taxes and if you hate paying taxes, Jeff should
really
be
need to talk.
the person that you need to call. All right, taxes. They are a necessary evil. Roads, bridges, schools, all that stuff. But I don't want to pay more than my fair share.
Yes.
And if I don't do anything, chances are I'm probably paying more than I have to.
Pretty much.
And
don't pay any more than what you're legally obligated to.
And here's the thing. We did the flex spending account, the FSA, for my son's schooling. We kept $1,200. This year we're going to try to maximize it and keep $2,400.
Yes.
$2,400. Who needs that money more, the federal government or me?
You.
So it's not like I'm screwing the government out of any money. I'm actually getting to keep some
put
more
on the books
and the guy
for your advantage.
I always love this image. I know it never happens, but in the IRS and whether it's in Austin or Kansas City or Utah, somebody reads my tax return and they go over the big bell, ding, 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 ding. Oh, my God, there's a guy in St. Louis.
He used this, yes.
He used the tax code to his advantage. Oh, my God. Oh, yeah, popping champagne. We got one. So the only way to actually get a hold of these things and find real tax savings, or in this case, tax keepings,
yes,
is to get somebody on your side to look at your stuff.
That will actually sit down, strategize, put something together, and help you go forward.
I think our first meeting I brought to you last year's tax returns, a couple of paycheck stubs.
Yes.
We had a conversation. Josh, what is your life like? What do you look like on paper?
Mm-hmm.
I got a house. I've got a child. I'm married. I have one job. She has one job. Then you go from there.
Yeah.
And that's
super simple. It's a conversation that leads down that path.
And we come back every 3 months.
Yep.
And I know that open enrollment is coming up.
It's right around the corner.
We just got the booklet in the mail for my wife's job, and that's where we can look at 2023.
Exactly.
Say, how do we keep
plot
more?
This out. Exactly.
How do we keep more of
2023 is
ours?
Literally here, whether you realize it or not.
It's time.
Yes.
Yeah. And that's funny. It's October of 2022.
Yeah.
It's time to plan out 2023.
For 23.
And if you don't want to keep more of your money, then don't do anything.
Yeah.
And
you'll just keep giving the feds more money than what they should. So,
and I hate that. Look, I love taxes. Okay,
rephrase that.
I'm fine with taxes.
Yes.
But I don't want them to get any more than
what you have to.
Than what you have to. So
legally obligated to pay.
Absolutely. Give Jeff a call, 636-394-5524, Capital Advisory, GRP.com. Keep what's yours. You go to the website, top corner. There's a red button that says Get My Book.
Yes.
Get the free book. Keep what's yours. Thumb through it. Dog ear a couple pages. Go in to see Jeff and get a consultation and say, these are a couple things that I think would work for me. What do you think, Jeff, will come up? We're all individual tax. My tax obligation is not like yours. It's
exactly.
Not like anyone that is listening right now. Somebody might say, well, Josh, I'm married and have a young child too. And it's like, great, but
there's all little quirks in it, and everybody's a snowflake.
Right.
They're off by themselves.
So there's things that people can take advantage of that I'm doing, that I talk about.
Exactly.
But there's also things that they probably can't do.
Yeah.
So just get a tax kind of consultation with Jeff and find out what you can and can't take advantage of and keep a little bit more of your money. We'll go to commercial break, and when we come back, October is financial planning month.
Yes, it is.
It's 2023 now. It's here. How do we make sure that we keep more of our money in the new year? We'll talk about it because it's never too early.
Exactly. Be ready
to start planning. Keep What's Yours with Jeff Zufall on the Big 550 KTRS.
Keep What's Yours continues with Josh Gilbert and Jeff Zufall.
Back at the Big 550, back to Keep What's Yours with Jeff Zufall, talking taxes every weekend. Do you pay taxes?
Yes.
Yes. Yes. Everyone says yes. Are you paying more than what you have to?
That's the question that nobody worries about.
And unless you have someone like Jeff taking care of you, the answer is probably yes. I am probably paying more than what I technically have to.
Yes.
Federal government puts out a tax code. The Congress people write it. Well, their aides write it. And the only problem, they never tell anybody what's in it.
Yeah.
So I could be taking advantage of things that, I don't even know exist.
Well, just like the Inflation Reduction Act, it's put out there. It's refined over a period of time, and it'll change a little bit. And then you go, ooh, I could use that piece of it or that piece of it.
So if I had somebody audit my tax situation, my tax liabilities 5 years ago, things have changed.
A bunch.
Yeah.
A whole bunch. But technically you can only go backwards 3 years to amend a return if there's an issue. So,
but if somebody looked at my life and they said you can take advantage of these things.
Most definitely. Oh, yes.
5 years from now,
extremely different.
And that's why I said, going into the commercial break, we sat down with Jeff at tax time. You did our taxes, but we've shown up again in August to kind of say, all right, what are we looking like
what's
now?
Next step?
Third quarter, fourth quarter stuff. because we can make changes to everything. And October is financial planning month, and it's when your HR department starts sending that booklet out.
Yes, and you look at that thing and go, oh, man.
Yeah, this again, open enrollment.
Yes.
This is when you start signing up for these things that are going to let you keep more of your money.
Exactly.
In 2023.
Exactly.
So what kind of things are we looking at here?
So basically, big picture financial plan-wise, for the month of financial planning, there was a study that was done in 2021 by Schwab, and it basically is a wealth survey. It said that only 33% of Americans said that they had a written financial plan, okay, which means basically a third of people had a written financial plan. But the people without a plan, 42% said they didn't have enough money to need a plan. 19% didn't basically have time to make a plan, and 22% responded it was too complicated to make a plan. Everybody needs something. It could be written on a piece of yellow notebook paper. Here's my plan. It could be that easy. I'm going to do X and X, and that's it. But typically what you're looking to do is it's as simple as maybe do a budget. I mean, that could be the first step.
Yeah.
Super simple.
What's coming in, what's going out.
Exactly. Retirement calculator. The question is, do you know what your 401k or your IRA is going to be worth when you retire?
Oh, man, that's 30 years from now, Jeff.
Exactly. And so there's estimators in a sense, because you don't want to go into it with, if I make 6%, my account will be worth $15 billion then. It'll never happen that way. Everybody's seen what's taken place in the market so far this year. It's not a pretty sight.
Right.
We had a couple of days of glory, Monday, Tuesday this week. Came roaring back, and then kind of just tapered off. So the question is, you can't say, if I just take $1,000 at 6%, it's compounding interest over time. That's what you need to look at. To go, I might need to put $100 more a month away or $50 more away a month. That's financial planning.
Yeah.
That's what a plan will actually help you do.
And you say that people don't think they make enough to do a financial plan. Oh, my gosh.
No, everybody does.
Everybody does. Everybody needs to have a plan in place. And you said sit down and do a budget. Well, if I had budgeted last year.
Exactly.
Hello, inflation.
Kind of blew that up. So
that
you
budget
need to
is gone
revamp
now.
it.
Yeah.
Exactly. And again,
if I'm just going out and doing the exact same thing I did this time last year, I'm looking at my accounts saying, why are they so much lower?
You're like, wait a minute. So again, here's the $20 million question. When you build a plan, you typically take inflation and you inflate your future income down the road to say if you make $50,000 today and you add a 3% inflation factor to it, it's $130,000 in 10 years. And you're like, wait a minute. That's the same dollars that you're bringing in today. It's just your purchasing power is less. Mm-hmm. But again, if you take it an inflation of 8.5% or 8.3 and run it out, it's a crazy number. But your money has to stay up with inflation as you go forward. That's the biggest issue that most people get tripped up in the, I made a 10% rate of return or 15 or I lost 10. The concept is you really want your money just to stay up with inflation as you go forward. And right now it's really tricky.
And that's, I think, where people get tripped up. It's like, I just did I saw a math equation online, one of these guru guys that does the nationwide speeches and everything. But you need someone really sit down and look at you.
Exactly.
You can't just take the numbers that they give.
That they throw out there because
for everyone.
It'll never happen.
It'll never happen that way. And you might have done a math equation without taking into account inflation.
Or maybe the market in 5 years, again, this goes in the accumulation stage versus the distribution stage. In the accumulation stage, if you have a 10% decline in the market right out of the box, it's not that big of a deal. But if you have a 10% decline in the distribution stage in the first year, that's an issue. It's a huge issue.
And if you're going forward and you're looking at your account and you're saying, I got $1 million there in my tax deferred IRA.
Exactly.
Are you taking into account the fact that the federal government still hasn't taxed you on that yet?
You have a joint account with the IRS.
With the IRS.
They own a piece of it.
And the question, what do I owe them? Great question.
Depends on where you're at.
It depends on what tax bracket you're in.
Yes.
When you take it out, how your required minimum distribution is dispersed. This is all very complicated stuff. and you need someone to walk you through it, because I mean, I've tried to think about doing it on my own, and it just, once you get to a certain part, your head explodes because you're just like, I didn't even think of that. Now I got to start all over again.
Exactly. Well, there's the part of the actual numbers calculation that you run forward. Hey, do I have enough? Do I need to put more away? But also, where are you going to be tax-wise as you go forward? Because a lot of people say, oh, hey, you got $1 million, but do you really have $1 million? You know, do you take that as a lump sum? Do you take it as a income stream? And if you do, what bucket of money do you take it from, and what bucket of money do you pay tax on? Which ones you don't?
For instance, if I had $1 million in there at retirement, 65, and I said, I want to take all of it out.
So today's tax bracket, 37% federal, plus say a 5% Missouri state, plus a 3.8% excise tax.
So that is, let's just say it's
almost 40, some odd 45%.
45% of that is going in taxes.
So you'd get $1 million. $450 would be your tax bill, hypothetically.
I'd get $550.
Yeah, you get $550 in your pocket. Yeah.
The big $550. Out of $1 million. And it's like, whoa,
It's a bunch.
I thought I had $1 million in there. Well, you could take it out strategically.
Exactly.
Or do some income planning with that, or retirement planning with that, and make sure that maybe you're only taxed $200,000.
Exactly.
Or $250,000 or something. You always have a buddy in the IRS when you do those tax-deferred IRAs.
Exactly.
You have to keep in mind, when are you going to take it out? How are you going to take it out?
Exactly.
Because the tax on it is different.
Exactly.
And October is a great time to do the October Financial Planning Month. Great idea.
Yeah.
Because as you've always told us, by the time we get here, we've already got 9-10 months under our belt of income. We can kind of predict what the rest of the year is going to look like.
Exactly.
So
be somewhat accurate on it.
We can run tax models and say, should I do a Roth conversion now? Should I contribute a little bit more to the 401k before the year runs out? Should I do this? Should I do that? And know what the tax implications of that are going to be.
Exactly.
So the converting to Roth, end of the year's coming up.
It's the time to start. Don't do it yet, but it's the time to start thinking it through and putting your ducks in a row, if you want to call it that.
Trying to get rid of that IRS as a buddy in my IRA. Maybe I'll take out $100,000 this year. Pay a 24% tax on it.
Exactly.
And pocket it into an account that is just mine now.
Yeah. And something else that's kind of the big piece of this is basically on the Medicare. Okay. So Medicare premiums, basically you're 65 or older, you're paying Medicare premiums through your Social Security, hypothetically, if you've already turned it on. If not, you get a bill. So one of the things to look at is if you have a Roth conversion or your income thresholds, what's taken place is if you are married, filing joint, if you make more than and this is technically retired, but on Medicare or maybe even working still, $194,000, your standard cost is $165 we'll say $165 a month. But if you make more than $194,000 in income, it's going to jump your monthly fee for Part B all the way up to $230. If you're single, it's $97,000, and it's going to jump it to $230 also. And then there's income thresholds as you go forward. You could get as high as $560 a month, depending upon your income. So that's part of that IRA. When you hit retirement, if it's all IRA money, it's all going to be taxable income to you. So that's where the planning or the strategy from a financial plan comes into play to say, hey, you still have the same dollars, but they have to be broken into the different buckets is the easiest way to do it.
And that stuff is all confusing.
Yeah.
I mean, they couldn't have made it more confusing.
Oh, yeah.
I would love to see a system that's even worse than this.
I don't think you'll find one.
It's the one that we have.
Yes.
So how do we navigate it? We call Jeff.
Yes.
636-394-5524. CapitalAdvisoryGRP.com is the website. Go there and get the free book. Start making notes inside the book. Bring the book with you to your consultation and say, Jeff, these are the things that we heard about on the radio. These are the things that we read about in the book. How can we be more tax efficient?
Yes.
And I can only imagine that everyone can do something.
Something. Could be a simple 401k, maybe an IRA. And then depending upon your tax situation, it could branch off and be multiple items that you do on an annual basis.
October is financial planning month. October is the time that you can kind of guess what your tax liability is going to be for the rest of the year. It's the time to start thinking about, should I start converting some of my IRA, my pre-tax IRA to a Roth? What should I do with open enrollment?
Yes.
What are the things that are out there? The FSAs, the health savings accounts. Yes. You got a lot of medical bills that you're going to have to pay regardless. I normally pay about $20,000 in medical bills every year. Well, start socking some money away into an HSA.
Which would help you on a pre-tax basis, reduce your taxable income.
Let the government pay part of that.
Yes,
and keep your tax liability a little bit lower.
Yeah.
So there are always things for you to do in October. We're new to the month.
Yeah.
But now's the time to do it.
Now's the time.
I love it. This is the time of year. The leaves start falling off the trees, and Jeff starts getting people knocking on his door.
Yeah.
Hey, we need to start making some financial
I need to
planning.
worry about this.
And here's the biggest bullet point. It doesn't matter what you make. I got a tax guy, or I got, my accountant. That's what rich people talk about at the country club. No, it's what everybody needs to be talking about.
Everyone.
Because I guarantee you, I'm not, hanging out with the blue bloods here, but I've got a tax guy. I've got a guy looking over my stuff, and I've got a guy that's going to help me with open enrollment, and his name is Jeff Zufall. 636-394-5524. I can assure you, I don't have a lot, but what I do have, I want to keep as much
as possible
of it, because I deserve it more than the government does.
Yes.
I'm okay with taxes. It's fine. I'm not going to moan about it. It is what it is, but I'm not going to give them a penny more.
That's right.
So come and get me, IRS. And again, Jeff does it in a way that takes the tax code into account. These are the things that we can do. These are the things that we cannot do.
Yes.
Because we don't want the IRS to come after us. And, if you do it the right way, they'll take a look at our tax returns and say, boy, that Gilbert kid got away with one again.
We'll get him next year.
So get Jeff on the case. 636-394-5524 and get your free book from capitaladvisorygrp.com. When we come back, wrapping the show up with a couple more conversations. Gold.
Yes.
There's gold in them there hills. And there might be some gold in your portfolio.
Yes.
We'll talk about it.
Keep What's Yours continues with Josh Gilbert and Jeff Zufall.
Back on the Big 550 KTRS, back on Keep What's Yours with Jeff Zufall, talking taxes on the weekend. And Jeff, we have been over a lot of stuff today. The Inflation Reduction Act has passed, but now it's been tweaked.
Yeah.
And once it starts, rubber hits the road, 2023.
Start to use it for your advantage.
January 1st, we can start using some of the stuff that's in there. So we need to know what's in there. Jeff can walk you through it. If I bring my stuff to you, you'll say, hey, you know what? This,
You could do this.
You could do this. You could do that.
Yeah.
This is in the new bill. This actually changed, and you can't do that anymore.
Can't do that.
So just bring your stuff to Jeff, and he'll start working through it with you. If you hear something in the news or you read an article and you say Inflation Reduction Act said something about solar panels, bring it to Jeff.
That's right.
We can read this stuff, but implementing it is a bit more tricky.
Tricky, yes.
So have someone help you out with that. Gold. We've talked about gold before on this show, and it kind of hurts my brain when I think about, people... precious metals, the commodities markets. I don't know this and that. You can buy gold. If I bought gold, do they mail me a gold bar?
You could if you wanted. They'll ship you a gold bar right to your house. It weighs a lot, and you got to find a spot to put it for security. You can't just set it on the table and walk away.
Well, I could. Hey,
you could.
Have you seen my gold bar?
Wouldn't last long.
And I've seen actually, some gold bars, they look like my pinky finger.
There's little guys, and then there's the what everybody traditionally thinks of as this giant gold bar that weighs 200 pounds.
I'm thinking of Sean Connery hitting odd
exactly
his gold finger with it, a giant gold bar.
Yeah. So gold, technically, gold, silver, is the hedge against crazy markets, so on and so forth. So if you went down this path, you got to make sure, because there's a very unique tax whammy that'll get you. So typically, if you are buying physical metals, gold, silver, and also goes down this path, you'll get a kick out of this. You guys talk about it on your show all the time. Artwork, antiques, vintage wines.
Oh, yeah.
So if you have your
vintage wine,
your bottle of vintage wine, rare coins and stamps are classified basically as collectibles. That's it. So typically when you buy and sell a stock, you either have a capital gain, capital loss.
Yeah.
Hold it for 12 months. It's a long-term capital gain, or long-term capital loss, one or the other. But what takes place is on collectibles, they run to so you either have a 15 or 20% capital gain rate
on capital gains. Yeah.
So 15, the normal person pays 15%. High income earners basically will pay 20. Okay?
And that's different. That's better. This is getting into the weeds and where Congress people give gifts to their rich friends. Even if you're at 20%, that's better than your income tax.
Exactly.
Which is going to be, if you're a high income, 35,
could
40%.
Be as high as 37, but typically they tax these things at a minimum rate of 28% plus.
Yeah.
So that's kind of the funny part is physical. Typically, if you buy physical gold, you hire a trustee. Trustee sits on it for you. They basically do the custody, or what's called safekeeping. So if you ever want to sell it, you got to call the trustee, say, hey, I sold this gold that needs to be moved from here to there. Mm-hmm. And they take care of it, kind of like a mini Fort Knox.
Sure.
Even though they say Fort Knox is empty, but
right.
It's a whole nother story. But that's something that a lot of people are starting to venture off to with the weirdness of this market. It used to be the hedge always for a down market was gold or silver. Not so much anymore.
You hear the commercials all the time. Buy gold.
Oh, yeah. And so basically what that is they want you to pay the trustee fee for someone to sit on your gold coins or sit on your gold bars. But a lot of people do take it. They'll have it shipped to their house. They'll put it in their own, safe deposit box or their own, vault at their home. That's great. But the bulk of these guys will make a trustee fee to hold your gold bars for you, your silver bars. So
when I think about buying gold, or since they're all the same classification, gold, silver, my Picassos, the artwork that I have, the vintage wines that I have, but then I go and sell those. I saw a story that a Ming vase from China from the 3rd century was expected to sell for around $10,000, and it sold for $9 million. Yeah. Okay? That person just made a bunch of money selling that.
But they're also going to pay a bunch of tax.
Since it's a collectible, since it's something they can hold in their hands, since it's a collectible, they pay ordinary income tax on that.
Basically, that's what it is.
Whereas if I had a stock that I sat on for a long time
even
and
if
I sold
15 or 20 maximum
is capital gains.
Yeah.
So a collectible pays income tax, and a stock or something
pays a capital gains tax.
Or a house.
Yeah. Well, primary residence, basically exempt. Secondary, so like a rental.
So I sold a rental property.
Only if and they make some exclusions in there. But typically, for a rental, basically, if you're profitable, you're going to pay capital gains. Mm-hmm. If you take a loss on it, you'll take a capital loss.
So there are differences, though. There are gold shares.
Yes. So you can have a mutual fund or an ETF.
Based off gold.
That could be buying the refiners, the miners. I say manufacturers, if you want to call it that, the standard capital gain. But then if some of your mutual funds or your ETFs are actually buying the gold coins or the bullion,
the physical,
then it does come into a little bit of a different tax classification.
So that's something to keep in mind.
Yeah.
If you are buying gold or precious metals, or collectibles, as they call them, if you're buying those and then you go to sell them, you need to know that this isn't capital gain.
That Monet that you found in the trash can, at the yard sale that you just sold for $50 million, you have a tax liability.
Which is a lot higher than a general capital gains tax.
Yes. So just something to look out for. And then that's the question of the day. did gold bars, or gold coins lose its luster in all of this crazy stuff just because of the way it's taxed?
Yeah.
Depends on your tax situation.
So it's like, I made some money, but you didn't make as much as you thought you would.
Exactly.
Because it's going off to the government.
Yes.
And everybody needs to look at their IRA. And remember, if you did a tax deferred, the government is still there
your
waiting
partner
to tax
waiting.
it.
Yep.
So how do we sell my gold tax efficiently? How do we cash in my 401k tax efficiently? How do I go out my ordinary life in the most tax efficient way? 636-394-5524. Jeff Zufall, Senior Tax Strategist and Wealth Advisor with Capital Advisory Group. Go to the website, capitaladvisorygrp.com. Click on the button that says, send me my free book. Get the book.
Yes.
Thumb through it. Dog-ear a couple pages. Make some notes. Call Jeff, 636-394-5524. Get an appointment set. Go to the appointment.
Yes.
And just say, Jeff, this is my life on paper.
Yes.
How can we be more tax efficient?
It's that easy.
And if you hate taxes and you're outside picketing outside of the city hall, say taxation is theft, Jeff should be the first person you call.
Yeah, and then go pick it.
636-394-5524. Give Jeff a call. Thank you so much.
Thank you.
We'll see you next week.
You've been listening to Keep What's Yours with Josh Gilbert and Jeff Zufall, Senior Tax Strategist and Wealth Manager at Capital Advisory Group. To learn more, call 636-394-5524 or visit capitaladvisorygrp.com.